The US dollar failed to hold near the 3-month high and retreated slightly to ease an overbought condition. Meanwhile, investors are taking into account the prospects of a change in the Fed's monetary policy. The timing of when the Fed will begin to cut rates is postponed, which supports demand for the US currency. The Fed is not yet ready to start easing monetary policy due to the risks of inflation acceleration. In his latest interview, US Fed Chief Jerome Powell confirmed that the rate would not be lowered in March, adding that the US Central Bank would act much slower than the market expects. Therefore, when trading in the forex market, one should pay close attention to macroeconomic reports to understand market trends. In our video review, we will continue to observe economic events that will be released during the last 2 trading sessions over this week. You are watching the Trader's Calendar. Interest rates are tied to the inflation rate issue. While developed economies suffer from excessively high consumer price growth, we see the opposite picture in China. Inflation is only descending into negative territory, sparking anxiety among investors. After all, a decline in inflation is a clear sign of a downturn in the economy. If the second largest economy is slowing down, the world economy is going to decelerate too. Sluggish demand restrains further development and growth and negatively affect risk appetite. This news will likely put pressure on the Australian dollar, viewed as a barometer of risk sentiment in the Asia-Pacific trading session and the currency of the commodity supply to the Chinese economy. During the US session on February 8, investors will assess the prospects for an interest rate cut, and this time the speculation will be based on the data regarding the unemployment claims. After last week's strong employment data, the report will be closely watched. According to forecasts, the number of unemployed remains within acceptable levels, which means that no dramatic changes in the labor market are expected, and the Fed is unlikely to take any action in the near future. After Thursday, the markets will be watching for the news on a German inflation that should be released on a Friday. The report should confirm the accuracy of initial calculations, which showed a slowdown in the growth rate of consumer prices. In January, the inflation rate was at 2.9% on an annual basis, a fairly significant slowdown. If the preliminary estimate is confirmed, the investors may continue to sell the euro, as the European Central Bank will begin to cut interest rates faster than the Fed under such conditions. At the end of the week, markets will await news from Canada on the change in the number of employed. According to forecast analysts who follow the flow of macroeconomic statistics from Canada, expect positive trends similar to those recorded in the United States. The indicator may show a strong increase, improving the investment appeal of the Canadian dollar. We will monitor the market reaction to the above-mentioned reports. Subscribe to the channel and follow changes in market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.